Now I'm going to explain what a CDO is. Essentially, we are looking at derivative products. This is something that I cover very often. Now, I'll just take a quick little example here. Let's call this, your credit card debt. You can see your mortgages here, and then we have our car loans, for example. All right, automobiles. And then you take this, mix it up. Okay, you have some from New York in each one, some from New York and some from Texas and some from California, and mix them all around, different credit qualities, different banks and everything else. Mix it up. Then you take it, you package it up, and you put a little bow on top. Okay? And that looks like a really, really nice present. Well, they call this a CDO. And that, the acronym stands for piece of garbage. And so they take this piece of garbage and they sell it to people, investors, and they give it a AAA rating. Okay? So your debt is attached to this. You have credit card debt, and somehow, some way, that is connected to a AAA investment somewhere, potentially completely across the world. But what happens when suddenly some of those credit cards start getting wiped out? Well, that trickles down, and you have a very, very big problem. That's what occurred during the subprime crisis, and that is what could occur again today, except the fact that people are in more debt today. More of their wealth is made up in these different, CDOs, whatever, it doesn't matter. Okay? More of it. So the problem has compounded. It's become worse. So let's get on with this here. I'm going to show you actual examples of Canadian real estate. And I'm sure this applies to many cities. Looking at even Vancouver, you want to look at maybe even Montreal, look to the US. There's San Francisco, there's LA, there's New York. There's a whole bunch of different cities out there that are just astronomical, right? This right here is in Toronto. It's a nice area of Toronto, not the best area, but let's say a nice area, all right? So I'm going to put my mouse over some of these houses and condos, and you will see some of the prices, and you'll be amazed. I hope you can see this. If not, I'm going to quote them for you regardless. This is a home. Not a very large home. It's a 3-bedroom, 2-bath, but ultimately is an old home. I'm not going to click on it, but essentially what we're looking at is $1.4 million. Okay? Take a look at this one. Let's see what we got here. This is a condo, 1-bedroom condo, $555,000. What about this? A 2-bedroom condo, $725,000. Looking at this house here, 1.3 million, 1.3 million. Maybe we'll go in here. This is I actually had to click on this because the price was so high. This is a very high-end luxury condo, a 2+1. And ultimately, I don't know about where you live, but +1s don't actually mean a +1. It's just a 2-bedroom, and that is 1.9 million. But even looking at this one, it's a 2-bedroom, 3-bath for $900,000. Anyway, I've made my point here. Just looking around, you will see that it costs. These are some expensive areas, but it doesn't surprise me to see for a 2-bedroom condo anywhere between $600,000 and $800,000 for a 2-bedroom condo. If you're looking for a detached home and you don't want it to be in a relatively bad area, a detached home is going to cost you, I don't think I've seen many under $1 million these days. It's not often. Now we're looking at all of this. coming at a time when the interest rates are very, very low. What if that changes? Well, they're already changing. You can see that I've quoted here before on the channel, individuals in Canada, if $200, their expenses increase by $200, they're screwed. $200. We're almost there. A couple interest rate hikes, and that's it. Now I want to switch gears. This was brought to me by a subscriber. I wanted to cover it here. I, of course, will need to look at this further in depth, do a whole show about it, but look at this. They were blamed for the biggest financial disaster in a century: subprime mortgages, home loans to borrowers with sketchy credit who put little to no skin in the game. Following the epic housing crash, they disappeared due to a strong new regulation and zero demand from investors who were badly burned. Barely a decade later, they're coming back with a new name: non-prime. Can you believe this? I laughed when I read this article. Non-prime. It's not subprime. That has a bad, bad energy, bad vibe to that. Doesn't sound very nice. But non-prime, I mean, that's, I don't have an opinion about non-prime. It could be good. It could be bad. Who knows? It's just non-prime. And so far, some new standards. Well, this particular company, Carrington Mortgage Services, just announced an expansion into the space, offering loans to borrowers with less than perfect credit. Carrington will originate and service the loans, but it will also, check it out, securitize them. That's right. Remember what I showed you about these securities that are being created, these derivative products. That's why they want it. They don't care about your mortgage. They want to sell it to an investor. That's where the real money is. And I can't believe it, but the same problems that were going on leading up to, I say 2007 really, for the housing crisis, and it was all downhill from there. But the same problems are happening today. A decade later, nobody's learned their issue, everybody has amnesia, and we are simply heading into a brick wall. I'll end it there. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you have to do is go over to Amazon. There's a link in the description of this video. It's going to bring you over to there. You can flip through the books for yourself. Take care.